You are probably paying more in taxes than you should, not because you are doing something wrong, but because you do not know the rules that let you keep more of your hard-earned money. What if I told you that with a few smart legal strategies, you could reduce your tax bill, save thousands every year, and still sleep peacefully knowing you are doing everything by the book? Stick with me, because today I will show you how to save money on taxes the legal way. Welcome back to Rich Map, where we help you master money, build wealth, and create financial freedom step by step. Taxes are one of those topics most people avoid. They are boring, complicated, and confusing. But here's the truth. The people who understand taxes do not just save money, they win at the money game. So, if you have ever looked at your paycheck and wondered where all your money went, this video is for you. Let's start with one simple idea. You could not avoid taxes, but you can avoid overpaying them. The tax code is full of opportunities, deductions, credits, and strategies, designed to reward people who make smart financial decisions. The problem is, most people do not know how to take advantage of them. The first way to save money on taxes legally is by maximizing your deductions. Deductions are your best friend because they reduce your taxable income, the amount the government can tax you on. Think of it like a discount on your income. For example, if you earn $60,000, common deductions include things like student loan interest, mortgage interest, charitable donations, and even medical expenses if they exceed a certain threshold. But here's the real kicker. If you are self-employed or have a side hustle, your world of deductions gets way bigger. You can deduct business expenses like your laptop, internet bills, phone, travel costs, and even a portion of your home if you use it as an office. The key is keeping good records and receipts, because the IRS only believes what you can prove. Now let's talk about tax credits. These are even better than deductions, because they directly reduce the amount of tax you owe. Think of them as a coupon applied to your tax bill. For example, if you owe $2,000 in taxes and have a $1,000 tax credit, you only owe $1,000 now. Popular credits include the Earned Income Tax Credit, Child Tax Credit, and education-related credits like the American Opportunity Credit. So, always check if you qualify for any of these. They can make a big difference. Next, one of the most powerful tools for tax savings is retirement contributions. When you put money into a retirement account like a 401k or IRA, that contribution is taxed. That means you do not pay taxes on that money today. Your taxable income goes down. Another smart move is using health savings accounts, or These are triple tax advantaged, meaning the money you put in is tax deductible. It grows tax-free, and you can withdraw it tax-free for medical expenses. If you have a high-deductible health plan, opening an HSA is one of the smartest tax moves you can make. Now let's talk about one strategy. Most people overlook investing with taxes in mind. The way you invest can affect how much tax you pay. For example, if you hold your investments for more than a year, you qualify for the lower long-term capital gains tax rate. That can save you thousands compared to selling quickly and paying short-term rates. Another tip: consider investing in index funds, or ETFs. They tend to trigger fewer taxable events than active trading. And if you have losses in your investments, you can use a strategy called tax loss harvesting to offset gains and reduce your tax bill even further. Owning real estate also opens up amazing legal tax advantages. If you own rental properties, you can deduct mortgage interest, property taxes, insurance, and maintenance costs. Plus, you get to claim depreciation, which lets you deduct the property as wear and tear over time, even if the property is actually increasing in value. That's one of the biggest legal tax loopholes the wealthy take advantage of. And speaking of the wealthy, let me share a secret. The rich do not just earn income, they structure it. If you have a side hustle, business, or freelance gig, consider forming an LLC or S corporation. This can allow you to pay yourself a reasonable salary and take the rest of your income as distributions, which may be taxed at a lower rate. Of course, this depends on your situation, so consult a tax professional. But the potential savings are huge. Now, here is a mindset shift that will change how you think about taxes forever. Tax planning should not happen once a year in April. It should happen all year round. Most people wait until tax season to think about saving. But by then, it's too late. If you are serious about keeping more of your money, Get a good tax advisor, not just someone who files your taxes, but someone who helps you plan strategically. A great accountant can pay for themselves many times over by helping you find legal deductions, credits, and strategies you did not even know existed. And do not forget, the key word here is legal. Tax avoidance is smart. Tax evasion is not. Always play within the rules, because no amount of savings is worth risking penalties or audits. The goal is not to cheat the system, it's to understand it better than most people. So, if you have ever felt frustrated watching your paycheck shrink because of taxes, remember this. The system rewards those who take the time to learn it. Start small, track your deductions, contribute to retirement accounts, and be proactive about planning. Over time, these small, legal moves can save you thousands of dollars and bring you one step closer to financial freedom. Thanks for watching today's video. If you found this helpful, make sure to hit that like button, subscribe to Rich Map, and turn on notifications so you never miss another money tip. Let's build wealth smarter, not harder. See you in the next video.